Welcome guys to another video of Purpose Trade. My name is Purpose Khan, and on this video I wanted to talk about energy trading. This will be one of many videos that I'll make on energy trading. So for those of you who don't know, I have a background in energy trading, so I want to talk about my journey, how I got the job, what I learned from the job, and what you should focus on if you're trying to be an energy trader and the basics. So basically, first let's understand what's the job of an energy trader. So energy trading is a very broad term. It's a very general term. So it can be oil, gas, electricity, and yeah, basically any commodity that's related to the energy industry. I was focused on power, electricity, or so that's also known as a power trader. And we did some corporate gas balancing for our power plants, our gas power plants, but our main focus was on maintaining our corporate power positions. And when I talk about power throughout these videos, I'm talking about electricity. And so what's the job like of a power trader? So basically, you have two types of power markets. You have the liberalized private power markets, and then you have the state regulated, state owned power markets. Okay. Most of the world relies on the regulated, state owned, monopolistic power market where the state provides the electricity, state manages the power plant. Okay, most of the world relies on that kind of regulated power markets. And the upsides there is that you can regulate the price you give out to your customers. So you can give subsidies to power plants. And yeah, it's a very, well, it depends how you run it, but it can be very efficient if you run it as a vertically integrated system, right? All the way from the government down to the customer. And so, especially in countries where the consumer's purchasing power is very low, then you need a state regulated power market because if the electricity price is too high, too expensive, the consumers will not be able to pay it. They might complain. And so, yeah, most of the world, especially the global south, the countries in Asia, and yeah, most of the developing countries basically, they have a state owned, state regulated, one company, usually government controlled power plants and power system, and the prices are regulated throughout the country. And then you go to the Western countries who basically decided to form a stock exchange for the power markets. And the idea was that if you privatize the power market, that's less expense for the government, less bureaucracy for the government to handle. Let me tell you what I think happened. Okay. What basically, in my opinion, happened is that most of the Western countries, and these are not just, we're talking about national level governments, we're talking about state level, provincial level governments as well. What basically happened was the balance sheet got too inflated, okay, because they've been taking too much money, they've been borrowing too much, and the balance sheets became too inflated. They're creating more liabilities than they had assets. So they were basically in a point of a delinquency, bankruptcy. And so they decided to sell their state-owned power plant assets and raise some capital to pay off some of the government liabilities, which was a short-term solution to somehow fix the balance sheet in the short run. But obviously, in the long run, the government's net assets were negative. So by selling the power plant assets, and that's a big asset of the balance sheet. So in the long run, they still took on more debts, the governments, but now they have less assets to go against the debts. So they're basically in a net negative equity, as I talked about in previous videos. I'll give you a very simple example. So UK is actually one of the earliest uh, adopters of the private power market, and they started in the 90s. You know, Second World War happened. They borrowed too much money from USA. They lost the British Empire, lost a lot of revenue. The UK government was broke. By the 1980s, the government balance sheet was looking like they had to declare bankruptcy. They didn't have enough revenue to pay off their liabilities. The loans that were becoming mature, and USA was calling back all their loans and all that. A lot of things were happening in the 80s and 90s. And to fix the solution and in the short run and basically kick the can down the road. Let's let it be someone else's problem to solve down the road. The government, I think it was under Theresa May or someone, it was Conservative Party, I'm pretty sure. And they basically decided to sell the government-owned power plant assets to private market. Now you can't go to your public and say that, oh, the government's broke. We need to raise money to pay off our debts that are coming due. So we're gonna sell some of our government assets, which give you cheap electricity. Like the public is not gonna like that. So they had to set up this new facade of, you know, we believe in the American style of free capitalism, and we believe in private markets being more efficient, blah, blah, blah. Set up this nice facade that they're doing this for the good of the people. And yeah, so the power markets in GB, Great Britain, were the first ones to be privatized, liberalized. And the government was able to raise some capital and pay off some, due day loans and avoid bankruptcy for the government. And so basically kick the can down the road because the problem wasn't solved. Okay, the government still had way too much liabilities on their balance sheet than they had assets to pay them off. And but they just wanted to fix the problem in the short run and kick the can down the road. And I'll give you another example. Like right now, UK's balance sheet is the government balance sheet is broke again. They can't pay off the debts that's coming due. So what they're thinking of doing is selling off their water operator, the national operator of water and sewage power sewage system, and making privatized, basically privatizing water. So it started with electricity. Now you're privatizing water. What's next? So what's the point of government if you don't have any assets at that point, right? Like you're just basically a debt holder who's going to tax the people to pay off the debt at that point. You're going to have nothing left. But yeah, going back to the topic at hand. So basically, that's what happened. And all these power plants were bought up by the private market. And power plants like power prices didn't go down after that. It just kept going up, and as it should have. Okay, when the private market gets involved, yes, in a free system, in an actual fair capital system, power prices could have gone down. But what you have is basically an oligopoly of a few big players with a lot of capital who can dominate the power market and set the power prices and maximize their profits from the power plants by setting up by basically dominating the power capacity in the market. Okay, it's pretty simple. I'll give you a simple example. Let's say there's a big company, company A, and they have a large volume of capital that they can deploy in the power market. They buy up, let's say, 80 megawatts of 100 megawatts of power in the market. Okay, they produce 80 megawatts of the total 100 megawatts of power in GB. Okay, obviously they're going to set the power price because they own most of the power. So they can set the power price as high as they want and get the maximum value for their shareholders. So obviously that's what happened. Power prices went up. It didn't go down after it got privatized. And so that happened in GB. And then USA did the same thing too, right? USA had Enron in Texas and California. That ended badly, right? Enron didn't go well at all. Yeah, so then Europe like, okay, let's make an Enron out of in Europe. And then Europe started liberalizing their power markets. You have Canada, which started liberalizing their power markets. And yeah, so especially in Canada, I worked in Alberta, in the liberalized power market in Alberta. Alberta, it's kind of a similar story. The Tories were in power in the Alberta provincial government. The balance sheet was very bad after the NDP left, I believe. Or no, this was actually in the early 2000, like 2005, 2006, something like that. But the balance sheet of the government was bad. Oil prices went down significantly. The recession was here, and Alberta is highly dependent on the revenue from oil. So the Alberta provincial federal government's balance sheet was very bad. So they needed to pay off a lot of debt. So they basically started selling off the government assets. But they needed to sell them off in a way that the public doesn't think that the government selling them off because they're pro. So they use the same facade as what the UK did, and they liberalized the power market, sold off the provincially owned power plants to private market, and power prices have been going up in Alberta ever since. It hasn't come down. This idea, this fancy idea that power prices will come down if you liberalize and privatize the power market. In theory, it will work if every player gets an equal chance in the market. But in practice, there are few players with a large amount of capital that dominates and sets the price in the power market. And so power prices goes up, and these players are only accountable to their shareholders. They're not accountable to the public. So yeah, power prices have been going up in Alberta, and so yeah, basically this energy trading has now become a popular role in the Western world. You'll see so many jobs in energy trading. And so if you want to be an energy trader, the thing you need is usually a degree in engineering, economics, some type of finance or quantitative analysis focused degree. And the entry point is not really not the barrier to entry into this field is really not that high. I know a lot of people with very bad degrees who got into this field. And so yeah, like the entry point, the barrier to entry is actually not that high in the power markets. But just understand that it's long hour shifts. It's usually 12-hour shifts that you'll start up with. And also there's a lot of shady, I mean, look, trading is that you will come across a lot of shady characters in trading. That's just pretty obvious. But in power markets, just understand that it's really, especially if the market is not very saturated, if there's only a few players in the market, it's not that hard to manipulate the power price in the market. And you'll see that if you work in a power market that's recently been liberalized. But if the market is very saturated, I guess there's more public information available. It's hard to get away with any market manipulation. And yeah, so I mean, the question is, what does the future look like for this kind of job? Well, what does the future look like for the governments in these countries? That's what the first question you gotta ask, right? And obviously, these governments are going more and more broke, so there's no way they're gonna be at any time in the near future where the government's gonna have enough money to buy back, to basically make the deprivatize, nationalize the power market because they don't have enough money to even pay off the current debt. So there's no, I don't think the government nationalizing the power market will happen in the Western world anytime soon. But as an energy trader, what does your future look like in this market? Look, at the end of the day, you know, if you are making money as a trader, if you're making money in the power market, someone is losing money. Okay. And more often than not, it's the endpoint customer who's paying the electricity bill that's losing the money. It's really that simple. When you jack up, bully up the power prices to make more money on your, curve positions, future positions, hedge positions, whatever, you jack up the current market power prices to make more money in your futures positions. Um, the people who are losing the money are the public. And like I talked about, the middle class in the Western world is shrinking at a rapid pace. So a point will be reached when they'll just, the demand for electricity is not elastic. I mean, it was inelastic. So inelastic demand basically means that people are willing to pay more and more prices and not reduce their demand for the product. That's an inelastic demand in economics. But an elastic demand is basically the demand and prices are correlated. So as the prices increase, the demand drops. And so electricity used to be one of those products that was supposed to be having an inelastic demand, where the increase in power prices didn't significantly cause a drop in consumption of electricity. But because, especially look what happens in UK. people can't pay the electricity bill. They have to choose between keeping their lights on or keeping their heats on or buying food. And so now, as the middle class is shrinking rapidly in these Western countries, you have this chart of price and demand becoming more and more elastic. And power prices will reach to a point where peak value, where basically demand will start dropping. The middle class will basically be too poor to um, consume electricity at the same rate at that peak price. And so they'll basically decrease their energy consumption, electricity consumption. And in any market where the it's all a matter of supply and demand, right? So if the demand drops and if the power market become elastic and the demand drops as the power price increases, as what I think will happen because the middle class is shrinking rapidly in the Western world, the purchasing power of the middle class, then so in any market as the demand drops and the supply increases, as more and more players gets in, you're left with a sudden significant drop in power prices, right? And as a trader, you're gonna have fewer and fewer opportunities to make money if power prices drop significantly. So this is what I think will happen. Again, I just want to go back to the basics. So you have country A and country B. Both of the middle classes are shrinking. Okay, but if the country A's middle class wealth is decreasing at a faster pace than country B's middle class wealth, so country A is getting poorer at a faster pace than country B, the power prices will drop faster in country A than in country B. So as an energy trader, you're basically buying from country A and trying to sell to country B. So we talked about this in among the Western states, Western countries. USA will have the lowest rate of decline among all the Western countries because they'll try to bring down their vassal states before they go down, and so you'll see more and more power flowing into electricity into USA from other countries, mainly Canada, because Canada has a lot of interconnectors built with USA. Yeah, so as a trader, you can make money from by buying from Canada and selling to USA, unless Trump brings up those tariffs and whatnot. But yeah, in Europe, if you want to compare UK with European Union, I mean, it's hard to debate which countries in Europe are getting poorer than fast at a faster rate than which ones. But yeah, so basically that's what the dynamics is going to be. So as a trader, as an energy trader, I think the market has reached its saturation point. I think the growth level for energy trading jobs is overblown, and it's just like any other jobs, really. I think, environmental, um, carbon accounting jobs were a big deal. It grew at a fast pace the last few several years, but now they're declining, and people were talking about how they'll keep growing, but that didn't take place. I think the energy trading jobs have reached a peak level. It's a very saturated market. And given the dynamics of a shrinking middle class, more saturated power market, and more interconnectors getting built between all this liberalized power market, you'll see similar prices between more markets, and so less opportunities for arbitrage. And so, yeah, you're basically not going to have much opportunities to make money as a trader. And so, sure, if you want to get into energy trading, you can. But if you're thinking about considering a long-term career as an energy trader, just understand that, in my opinion, at least, given what I've just said, I think the prospects of a growing industry in energy trading is very unlikely. I think, yeah, I think there's way too many players involved, and you need to take the money from somewhere. Like I said, it goes back to you follow the money trail. If the middle class is broke, who are you gonna fleece off the money from? Okay, it's really that simple. And you can try to buy electricity from a broke middle class in one country and sell to a more richer middle class in another country. Sure, but as more and more interconnectors get built, even that opportunity will decline. So I think energy trading has reached its saturation point. But that doesn't mean you shouldn't try to understand the market. I mean, it's a good way to understand how electricity works. Like, don't get me wrong. These power prices in different places, how they're related to the supply and demand, and how the structural things work in the market. I think it's a very good way to understand the electricity grid. Okay, so you can still do this job, and maybe 5, 10 years later, go to work for a state-run electricity company without an electrical engineering degree. And so, don't get me wrong when I said that it is a decent job, and it is a good way to learn about the power market, power electricity grid. So yeah, well, yeah, that's it for this video. And on the next video, I'll try to talk about the basics of the market, the technical aspects, the engineering aspects of the electricity grid, how the engineering aspects are connected to the economics of the market to set up the power market. And yeah, until then, peace.